Hey, welcome to the Mortgage Minute this week. Just grabbing two simple headlines. First of all, here's one talking about the tumbling oil prices are affecting the Canadian equities. Again, this is one of the, last time we did the Mortgage Minute, we talked about investing in AP Capital, which is, mortgage-related investments that are not correlated to the stock market. There's a perfect example why you want to have non-correlating assets in the mix. Another article, which I'm guaranteeing a lot of people might have missed, says the Bank of Canada looking at rewriting inflation targets. This is a very subtle, but I believe very critical and important article. As you have heard me say multiple times, the Bank of Canada will look to inflation, and 2% is their target. So 2% is like a speed bump. If inflation is below 2%, then they want to stimulate the economy. They stimulate the economy by lowering interest rates. Once inflation goes above 2%, they want to kind of drag it back down, and they raise rates to basically cool off the economy. So this is what's interesting right now. Currently inflation is about 2.4%. The Bank of Canada's next rate announcement is going to be December 5th. So if I'm just following that verbatim, then that would tell me that we should be in for another rate increase December 5th. However, what's really interesting is the Bank of Canada is looking at rewriting those rules, meaning they're going to revisit the whole process of whether or not they're going to use inflation as a simple target. They were saying basically they're launching a sweeping review, the first time in decades, to whether or not the guiding 2% inflation target will be continued. This has been in place since 1995. What's really interesting here, looking at page 2 of this article, if we go back to, first of all, the Bank of Canada rate is currently 1.75%. And if we look, which makes prime 3.95%, if we were looking to what we would call normalized rates from 2008, that target was actually, prime was 6.45%. So if you're floating in a variable rate and you hear terms like the Bank of Canada wants to get back to neutral rates, that means it could go as high as 6.45%. However, what this article is suggesting is they may reevaluate their definition of neutral and may reevaluate the way they go about analyzing whether or not to raise rates. Lots to discuss here. That's not going to happen overnight, but it's something to think about. And when it comes to your mortgage and what you should do, whether you should stay floating if you're in a variable, whether you should lock in, give us a call. Also, if you're looking to refinance or renew in the upcoming year, there are new mortgage rules that have really changed the definition of refinance and renewal. Used to be that's the exact same interest rate if you refinance or renewal, not anymore. So again, whether refinancing, renewing, deciding to lock in or stay floating, give us a call. Let us analyze your mortgage so we can help you walk through the options. Thanks. That's the Mortgage Minute for this week.